Welcome to the Way of Wealth. I'm Corey.
And I'm Lily.
Today we're talking about a legendary figure, Eric Sprott, a master-level investor in the Canadian resource investment world. He founded Sprott Asset Management and has been deeply involved in precious metals investing for decades. He's considered one of the greatest silver investors in history.
How impressive is this guy?
He manages billions of dollars in assets, and in a recent interview, he revealed that 90% of his personal wealth is bet on gold and silver.
90%? That's extremely aggressive. Don't investment portfolios normally emphasize diversification? Putting all your eggs in one basket, doesn't that violate basic principles?
It is extreme, but we'll explain why professional investors' allocations can't be compared to ordinary listeners. First, let's look at why he does this. Sprott makes a core observation. Central banks have shifted from gold sellers to buyers.
We covered this in our Gold Divinity series, right?
Right. But Sprott validates our thesis with data. He says in the early 2000s, central banks were still selling gold. Now it's completely reversed. They've become major buyers. According to the latest World Gold Council data, from 2022 to 2024, global central banks purchased over 1,000 tons per year, setting historical records.
What does 1,000 tons represent?
That's double the purchase volume from 2014 to 2016. More importantly, a 2025 central bank survey shows 43% of central banks plan to increase gold holdings, the highest percentage in 8 years. And not a single central bank indicated plans to reduce holdings. Think about it. Even the professional institutions managing national foreign exchange reserves are frantically buying gold. What does that tell you?
It says they have no confidence in the fiat system.
Exactly. Sprott observes that every fiat currency is actually weak, but because everyone's comparing them to each other, it masks their individual fragility. U.S. debt to GDP went from 35% in 1970 to 124% in 2024.
That's the financial addiction we talk about. Governments simply can't turn off the printing press.
Right. And that's not even the worst part. The Congressional Budget Office projects that by 2055, U.S. debt to GDP will exceed 155%. Sprott also mentions a key point. Silver supply is almost stagnant while demand is exploding. Global silver mine production in 2024 grew only 0.9%, with total output around 820 million ounces. But industrial demand hit a new high at 680 million ounces.
How big is the supply-demand gap?
Structural deficit for 5 consecutive years. 2024 deficit was 150 million ounces. 2025 is projected to have a 120 million ounce gap. Imagine every year there's a shortage equivalent to 2 months of global production. How do you fill that gap?
Prices have to rise to suppress demand or stimulate supply.
In theory, yes, but Sprott points out a harsh reality. 70% of silver is a byproduct of copper, lead, and zinc mining. That means you can't just increase silver production because the price went up. You have to wait until base metal miners are willing to extract. This makes silver supply extremely inelastic.
So the price signal fails.
Right. And industrial demand is still accelerating. Solar panels, electric vehicles, 5G equipment, AI servers, they all need silver. In 2024, the solar industry alone consumed 230 million ounces of silver, nearly 4 times the 60 million ounces from 2015.
What are gold and silver prices now?
Today, gold is around $4,600, silver around $73. The gold-silver ratio is roughly 63 to 1. Compared to a year ago, gold is up 40%. Silver even more dramatic, up over 100%.
Silver's gain is triple gold's. Will this trend continue?
That's exactly what Sprott keeps emphasizing. Silver is severely undervalued. He believes computer algorithms will notice this trend and automatically buy the best-performing assets. He says every morning you open your trading reports and see gold stocks, silver stocks are again the best-performing categories over time, smart money will follow. And he mentions a very interesting phenomenon. Even Bond King Gundlach is now bullish on gold.
A bond expert is bullish on gold?
Right, that's very telling. Someone famous for bond investing is now publicly bullish on gold with strong conviction. Sprott says you can feel the interest building. He's watched financial markets for decades and knows when an asset starts performing well. Eventually, everyone will follow. Then you get some kind of explosive move.
So why does he dare put 90% of his assets in gold and silver?
This is a critical point we must emphasize. Sprott is a professional investor. He simultaneously holds 20 to 50% stakes in multiple mining companies. He has the capability to do deep research, withstand extreme volatility, and his capital base is large enough to diversify across hundreds of companies. He says he probably holds stock in 300 different companies.
300? That's simply not something ordinary people can do. And managing investments in 300 companies, just tracking the information alone, is a full-time job.
Exactly. Our channel has always said, mining stock allocation shouldn't exceed 1/10 of total assets. The core should still be physical gold and silver. Sprott's 90% allocation is professional level. Ordinary people doing this would be unable to withstand the volatility and would sell at the bottom.
What does Sprott think about market bubbles?
He believes the current bubble is larger than the 2000 NASDAQ bubble and the 2008 financial crisis. He mentions companies like Nvidia, with valuations reaching over 20 times sales, far exceeding the semiconductor industry median of 3.5 times.
What does 20 plus times sales mean?
It means if a company has annual revenue of 10 billion, its market cap is over 200 billion. Sprott says historically, anything reaching this valuation level eventually falls back to around 2 times sales. He uses an analogy. During the NASDAQ bubble, people used eyeball count as a valuation metric. That's how absurd it was.
Eyeball count? What kind of metric is that?
Right. Literally how many people are looking at your website. Sprott says when people start using metrics like that, you know there's a problem. Not even looking at basic revenue or profits, just how many eyeballs are watching this has parallels to today's AI frenzy.
How will it end?
Sprott thinks the trigger will be in the credit markets. He says the US has to issue debt every quarter. Every week, someone has to buy it. The old buyers were savers, China, India. Now, average Americans have become negative savers. China isn't buying, India isn't buying, Russia is sanctioned and can't buy.
So who's buying?
That's exactly the problem. Sprott says more and more countries believe not buying US debt is the responsible thing to do. After Russia's foreign exchange reserves were frozen in 2022, central banks globally realized money in someone else's system doesn't truly belong to you.
So they're turning to gold because gold has no counterparty risk.
Absolutely right. Sprott mentions an interesting investment philosophy. He says he's an irresponsible investor, putting 90% of his assets in gold and silver. But this irresponsible is ironic. His real meaning is that facing irresponsible governments and central banks, holding physical gold and silver is the truly responsible choice.
That argument makes sense. So how does he pick mining companies?
He says the best signal is when nobody's paying attention. If a company has no analyst coverage, he knows there's an opportunity. He also mentions a case study Free Gold Company. At the time, the stock was only 6 cents Canadian, market cap $6 million, but claiming 6 million ounces of gold reserves.
That's like $1 per ounce? That's incredibly cheap. Gold is over $4,000 now.
Right. Sprott heard those numbers and immediately said, buy 25%. His partner asked, what's the company called? Sprott said, I don't know. Buy first, ask later. That decisive. Later, the stock went from 6 cents to 90 cents, 15 times return. Now the company has proven reserves of 30 million ounces, and Sprott thinks it could reach 60 million ounces, so market cap could double again.
But how could ordinary people find these opportunities?
They can't, which is why we say mining stocks aren't suitable as primary holdings. Sprott has a professional team, resources for deep research. He can judge whether drill reports are credible. He knows geologists, mining engineers. Ordinary listeners don't have these advantages. Our strategy is physical gold and silver as core, mining stocks as satellites, no more than 1/10 of the portfolio.
So if a credit crisis really happens, what then?
Sprott says when markets crash, people ask, where do we seek shelter? He's noticed that this year gold and silver stocks are the best performing category, and it's just beginning. He believes the market hasn't truly turned yet. But once it does, interest in precious metals will explode. And think about it. Even computer algorithms automatically track the best performing assets. When gold and silver led markets for several consecutive months, capital will naturally flow in.
Did he give a timeline?
No. And that's exactly what we appreciate about Sprott. He doesn't make doomsday predictions. He just says he thinks the Mag 7 tech stocks will correct soon. But what he's more confident predicting is gold's trajectory. Because the fundamentals have changed.
What fundamentals?
Exactly right. Central banks shifted from sellers to buyers. Gold production barely growing. Dollar weakening. Every fiat currency weakening. Governments being irresponsible. He says the reasons to own gold are now extremely compelling. And if markets really crash, the reasons to own gold will be even stronger.
What about silver?
He says silver production keeps declining. We need to be precise. Production isn't declining, it's stagnating. But demand is exploding, so there's been supply shortage for 5 consecutive years. This structural imbalance will eventually reflect in prices. And Sprott particularly emphasizes that silver is different from gold. It has industrial demand support.
Will industrial demand drop due to economic recession?
Good question. But Sprott observes that even when the economy is weak, structural demand remains. Solar, electric vehicles, 5G, AI. These are future trends that won't disappear due to short-term economic fluctuations. And don't forget, silver also has monetary properties. When gold rises to levels ordinary people can't afford, silver becomes the substitute option.
How high will it go? Any price targets?
Sprott says if this bull market's gains match the previous 2 cycles, gold and silver have a long way to go. But he doesn't give specific numbers, and we shouldn't speculate either. Our attitude is, we plan, but heaven decides.
Right. We prepare, but don't arrogantly predict. And we should remember, Sprott invested for decades before building this kind of judgment.
Sprott also shares an investment experience. He says he probably has more losing investment cases, but the key is, when you find winners, you have to dare to add to your position. Some companies he holds 45, 50% stakes in, precisely because when he saw the trend was right, he kept adding. That's what professional investors do.
That's also something only professional investors can do.
Right, but we can learn his logic. Don't diversify to the point where you don't know what you're investing in, but focus on assets you truly understand. For ordinary listeners, that's physical gold and silver. You might not understand mining company drill reports, but you understand the logic of physical gold and silver.
If you can't touch it, you don't really own it.
Right. That's why, even though Sprott holds many mining stocks, what he emphasizes is still physical gold and silver. He says when markets truly crash, the shelter people seek won't be stocks, but real assets you can hold in your hands. This point is completely consistent with our channel's core philosophy.
So what should ordinary listeners do? We don't have this professional capability.
Same old advice. Physical gold and silver are true wealth insurance. Mining stocks can be allocated, but no more than 1/10. ETFs come after mining stocks. Paper instruments last. And remember, Sprott's 90% in gold and silver is a professional investor allocation, not something ordinary people should do.
Right. He can withstand volatility, has a professional team for research, has capital diversified across hundreds of companies. If ordinary people did this, they'd panic sell on the first big drop and actually lose money.
Right. The insight Sprott gives us isn't to copy his allocation, but to understand why he does it. The fiat system is broken. Central banks are buying gold. Supply-demand is imbalanced. Credit markets are at risk. These are all structural problems, not short-term fluctuations. And look, even this kind of professional investor managing billions chooses physical gold and silver. That itself shows how serious the problem is. He lived through the NASDAQ bubble, experienced 2008, and still chooses physical gold and silver as his primary allocation.
So we'll follow what the channel has always emphasized. Slowly accumulate physical gold and silver. Observe markets with reverence, not gamble with speculation.
Right. Don't arrogantly predict, but don't ignore reality either. When investors at Sprott's level are going all in on precious metals, that itself is a signal. What we need to do is build wealth insurance steadily based on our own circumstances. Bye.
Bye.